Good morning and welcome to Monday. I'm Joe Jaquint, CEO of the Patriot Trading Group, and our toll-free number 800-951-0592. The website at allamericangold.com, and if you don't know it by now, but I know you do, the physical delivery of gold and silver. Before this thing is all over, the biggest question is going to be, how much does your portfolio weigh? And speaking of portfolios, we need January to get over and get over quick. The Dow, the S&P, the NASDAQ, back in the woodshed. The Dow right now down 630. The S&P down over 110. The NASDAQ's down 400 points as again, the bubble's starting to deflate. The inflationary cycle that Jason and I have been telling you is here, plus tax. The Fed, listen, the gun is empty. The gun is empty. Okay, and I know, everybody, they're going to have a big meeting. Yep, another one of these big meetings. They have a meeting every 6 weeks. The problem is every one of these meetings, they seemingly can't find their hands or their ass. And it is absolutely ridiculous. Now, we told you this all last year. All last year. And I know, right? Gold didn't do anything last year. It didn't. It should have. Everybody knows it. Right? So how about silver last year? It was, I don't even know, 20, 30%. Some ridiculousness like that. But again, I always make fun a little bit of our listeners at the mothership in Colorado for their undying devotion to Alex Jones. It's the same way with these equity markets. Their undying devotion to the central bank, which always leads us to crash after crash after crash, because they really only have one tool, and it's the same tool. Now, they claim, we got all kinds of tools in the toolkit. Matter of fact, they actually say they have a toolkit, and they say they got all sorts of different stuff. No, they only have one tool. And that tool is debt. That tool is printing money out of thin air and trying to call it prosperity. And Jason, as we know, there's no such thing as prosperity through the printing press. And unfortunately, a lot of Americans are paying a heavy price in terms of inflation. The one, I guess, good story of COVID was everyone felt richer because their 401k balances and their IRAs and all that stuff. Look at how much money I have. And in a matter of a few weeks, seemingly all of it being taken away.
That's right, Joe. And to see gold up $2 on a day when the markets are just crashing, that's a huge up day. Now, I know silver's down some, but there's going to be a lot of selling off going on. The NASDAQ was down 2% every day last week, now down 3% today, which is that's an increasing devaluation. I don't know if the Fed talks tomorrow and Wednesday, Joe, and calms this down for the people that are upset, but it's not a matter of if, it's a matter of when that this thing's going to crash really hard, and it looks like we're in the middle of it. They have those parameters, right? They have the stop meters when the markets are really going down, so that we can't have huge letdowns in the markets like 10,000 points or 5,000 points in a day, which I think could happen if it was allowed to operate the way it was freely operated, Joe.
Well, and again, we've been warning you for a long time. Be ready for big drops. Yep. Be ready for big drops because it's such a few amount of stocks holding all of it in. I know the Russell is now in bear market territory. All the Dow, the S&P, the NASDAQ are all in correction territory, headed to bear market territory. And again, the answer, though, really, unfortunately, isn't good for equities. Because what can Jay Powell really do? Because Jason and I have been telling you for a long time, they're out of options. They're in the corner. So right now, they've still got to end taper. Right? And they still know that they've got to raise rates. And it's just like I told everybody, you really believe 3 or 4 rate hikes is going to fix this? This thing, inflation has been out of the bag, running for so long. You think about it. We had bad weather on the East Coast, which what happens in wintertime, and store shelves are empty, and governments shooting themselves in the foot. Over the weekend, we instituted a policy that truckers from Mexico and Canada need to be vaccinated to go back and forth at the borders. Jason, it is really the most perfect storm of an idiotic, weak president with an idiotic, weak central banker that's going to lead. I'm positive this is going to be the biggest implosion we've seen yet when it comes to it. And think about what we've seen in the last 20 years. The tech bubble, the housing bubble, the financial crisis, and now we're getting ready for what I'm going to call the inflation crisis because Wall Street already, they haven't even raised rates yet, but everybody knowing and everyone coming to the realization of what Jason and I have been telling you for so long. Yeah, 3-4 rate hikes isn't going to get it done. And Wall Street, if that's the case, is so overvalued. And again, are we talking, is it going to be 50%? Is it going to be what Jeremy Grantham said, hey, listen, just to not even get back to where we should be normally, but just to get a little closer, a 67% collapse in equity prices. Everybody better buckle up and hold on. Make sure you have that gold and silver put away. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. I'll say this, Jason. If you haven't heard from your financial advisor in the last year, 6 months, if you haven't heard from them this year, you may want to consider calling my son, 602-909-9048, because you better be really nimble. And again, there's going to be moves here so big, even the best fight, you're not going to avoid it. But people out here already, if you think about it, listen, the NASDAQ is already, all the gains from last year completely gone. The S&P has taken back almost 65% of them already. The Dow, same thing. So when we're looking here, the Dow, if it better hold 30,000. Right now, the Dow's at 33.5. The S&P 3,800's the number there. It's at 42 because after that, things get really ugly. The Dow at 30,000 would be ugly. I mean, that's a lot of losses in a short period of time. And already the NASDAQ is in big trouble as well. As I said, the S&P and the Dow now in what they call correction territory. They've lost over 10%. The NASDAQ is approaching bear, so they've lost over 20%. And again, for very simple reasons. It's the same reason why we said it was a bubble before, because remember what these guys were telling you. Oh, it's okay. It's okay. I know that every metrics in the world says that this is a huge bubble. And going back to 1929, going back to the tech bubble, I mean, all of it. But people are dumb. They just always want to believe it can go on and on and on. But here's the situation was it's okay because interest rates were zero. The Fed was pumping up the markets. I mean, they were buying the bonds at a pace of $120 billion a month. And I want you to know, listen, that's over. Right? The bond buying's coming to an end. They're going to at least raise rates a few times. But my guess is, Jason, the Fed tucks tail and runs before the end of the year.
Yeah, absolutely. I was going to say, as you were really pushing hard, I was going to jump in when you're on a roll. But the only question will be when things get rougher and rougher in the markets is when will the Fed turn policy around and start printing again? And it's really, we just need to figure out when is that going to be, Joe. And I think they're going to have to try to stick with this for a while. But I mean, it gets bad enough. They could be February, could be March, could be April. They just turn around. It's like, okay, we're starting to print again. Forget this. We'll just print up 10 times what we did the previous year. We'll have instead of $120 billion going on the balance sheet a month, we'll make it $700 billion a month. I think they really think, Joe, that that's what they're going to attempt to do at some point. I think they're going to stick with this. Markets will have their correction. I think what they'll also do, Joe, is they'll say, well, remember in 2020 when we had the COVID emergency? Well, it came back pretty fast, so it'll come back again, Joe. That'll be sort of their calming influence.
Yeah, I am now I'm joining Jaquint. I'm on recession watch. The data has been absolutely abysmal. Today we had service sector PMI. So that's a small business, guys. I mean, really in a nutshell, this is about small business. Barely stayed out of correction territory. Came in at 50.9. This is an index that's been in the upper 50s and lower 60s, all of last year. It's one of the lowest prints. It's the lowest print since July of 2020, right? So think about July, right? We're just in the throes of the early COVID manufacturing PMI, the lowest print since October of 2020, and seemingly here, Jason, this high GDP that they were hoping for is starting to look a lot less likely. So that puts we're hoping for inflation. It looks like stagflation, which is even worse. But one of the things that again, and this is a telltale sign of how bad the problem really is. Let's talk about the trucking industry. We've learned more about that industry than we've ever wanted to know. One of the biggest trucking firms in the United States has just announced the largest pay increase for its drivers in the company's history. KLLM. So if you're out on the highways at all, you see these trucks all over the place, boosting pay by 33%. I mean, Jason, these are pay levels that we have never seen. You've never seen. It's one thing, hey, we're going to give you a 10% raise. That's huge. 33% is unheard of. And, of course, when you think about inflation and you think about cost, every single one of these people are coming out saying, transportation is a huge part. Labor is a huge part, and this has both of those elements in it.
Yeah, that's right, Joe. And with once again, this crash is different than the ones we've seen in the last 20 years because of the inflation. This is something that we haven't seen recently, and the markets, weren't really crashing in the 1970s. They weren't at the levels and overvalued the way they are now. We didn't have the debt, the $30 trillion in debt.
Didn't have, right?
So we
had inflation then, right? That was inflation. We had good GDP to go along with high prices, and this time it's going to be much different.
Yeah, so this is going to be really bad. I mean, Joe, I kind of get the feeling this. I've always kind of felt this with this market correction. It's going to be. I think it's going to be kind of a slow slide. I think they really wanted to just go 2% a day, 2% a day, and then what'll happen is it'll get out of their control, and you'll have like you said, a massive down day. And the small caps and the medium caps, Joe, we said they've been in crashing territory for months now. They're getting worse, which is I think why you brought up the Russell 2000. It's the small caps are completely being sold off now.
Well, again, when you think about it, who is least able to handle this environment? It's going to be the small guys. On Wall Street, that's going to be your small cap companies, right? Because, hey, how are you going to compete now? Think about what, and of course I drew like KLLM just said. Their starting pay for a driver, you're a rookie driver, right, was $48,000. It's now $70,000. I mean, that is incredible. And really all as that does is what it puts the pressure on these smaller companies. And they're like, I can't pay my rookie driver $70,000. By the way, did you see their new plan? It's been all over the news here in Phoenix. Teenagers. Yeah. Let's get the 18 and 19-year-olds and put them behind the wheel of semis and see how that works out, right? They're trying to hire anybody of their mother. Are you kidding me? You know, my kids are pretty responsible kids. Jason's kid's pretty responsible kid. There's no way. Do I want to see 18 and 19-year-olds behind the wheels of semis? It is absolutely insane, and this is the problem. By the way, they're saying a rookie driver, if you really wanted to go nuts. And my guess is, Jason, this would be the guys that you're over the road, you're not coming home very often. They're now saying they can make $150K a year with them after the price hike. And
all those prices will be passed on to the consumer, Joe. That's all. This is an inflative cycle. It's just going to be passed on. The guys that pay higher rates now are probably ahead of the game, Joe. That's almost, you got to make a decision when you're going to do it. They're all going to do it, but maybe you're a little better off if you decide to just start boosting your labor right now, because the competition, waiting around thinking about it, they may not survive it, Joe.
So remember the story we tell. We tell it all the time. I'll call it the gallon of milk story, right? You go to the supermarket, you buy the gallon of milk, and it was $4. That night, the store reorders their gallons of milk, and all of a sudden they've got to pay $5. So the next morning, the store changes the price of the gallon of milk to $6. People come in, they buy the gallon of milk, they go to reorder, and all of a sudden they get charged $8. Then they change the gallon of milk to $10, right? They go to reorder, and it's now $12. And this is why these small companies will go under. And think about what KLLM just announced today. What do you think that's going to do to freight costs for everything they transport? If they just raise wages by 33%, how much are they increasing the cost of transporting all of these products?
It's going to be a lot, Joe. What else can you say? Everything is going to get more expensive. Everything is more expensive. It's going to make it harder for everybody. And I don't know, Joe. We talked about this in 2021, and the Fed just didn't do anything, and they just kept printing, saying that the inflation didn't exist, and then it was just everything they've done, Joe. Everything the Fed has done is to kick the can down the road a little further, and I think they're going to let inflation run a little bit. And then when they start to actually raise rates and the markets start to crash, they will come back and do more quantitative easing. I said earlier, that's the only play they've got, is to crash the markets a little bit, a little air out of the tire, and then be the hero that stops the market crashing by reversing policy, and then print like crazy and see if how many months or years they can do with that, Joe. That's the only thing they can do.
Yeah, and it's just a horrible catch-22. Canada now, we've been talking a lot about Canada lately, right? Last week it was the hogs, right? The piglets can't cross the border into the U.S. to get to the Iowa and the Dakotas and all that stuff, and then the feed isn't getting up into Canada, and they have a problem. Apparently, their cows are starving. Canada, who hardly imports any U.S. corn. I'll give you as an example. About less than 500,000 tons of corn Canada would buy from the U.S. on a yearly basis. Not even 500,000. They've already ordered, just placed the largest buy in history, 3.2 million metric tons of corn, because, Jason, they are unable to feed the cattle there. Canada is now one of the biggest purchasers of U.S. corn alongside China, Mexico, and Japan. And again, no corn stockpiles. Guess what? Price of corn going through the roof. And we're in this huge, vicious cycle. And the only way out of it is to raise rates, and I mean raise rates big right now. Right now.
Yep.
Yeah, minimum. The Fed funds rate needs to be 6%. And they're talking about a quarter of a point, Jason.
Well, yeah. Once again, if they raise it by 6% and crash the markets hard all at once, that doesn't buy them as much time, Joe. They want this thing to be slow, and they want to have time to, I don't know, milk this thing for all it's worth. Because remember, the richest people in the world, they're gonna benefit the most off of inflation. They spend the same amount on energy and food as we do, but they have more assets that can be inflated in this thing and keep up with inflation. So they're going to be okay with this, and the people that back up the Federal Reserve are going to back up that policy of letting inflation go. So you're right, Joe. That a quarter point here, a quarter point there. Even if what was it? The guy from J.P. Morgan Chase saying maybe raise it 7 times this year, and that would be like what, maybe 1 3/4 points if it's a quarter point each move. That ain't going to do it, but it is going to kick the can down the road slower until they reverse policy. They're going to have to reverse policy, Joe, at some point. That's going to be the only play they have.
It's so dangerous. People don't really understand, and this is the problem. I fear a major collapse in the dollar because I think the Fed is going to do just what Jason said, which is tuck tail and run. And this thing's going to get way out of control. We got a new record high in the propane markets. We'll talk about that one next. Patriot Radio News Hour. We'll be back after the break.
Yes, ma'am, by God be darned.
800-951-0592. I'm going to help you add a little weight to that portfolio. U.S. $20 gold pieces. These are the pre-1933 Liberties and St. Gaudens. They're $21.25. I'm putting them on sale today. $2,100 gold. The only thing that is up today, 1,834, 1,835. The Dow having one of its worst days. Kind of hard to believe, at least right now. Worst day of the year. The Dow's down 700. The S&P's down 100. The Nasdaq's down 420 points as a Fed meeting tomorrow. I think people are just going to be looking for, obviously the taper's supposed to end in March, which is the next meeting. Is the Fed going to hike, which everyone right now says it's like 98% chance that there will be a hike in March. Trying to determine how many hikes there's going to be. Once again, I look for the Fed to be on the dovish side of things, but that remains to be seen. But inflation running out of control. The Energy Administration came out. Propane. That's the other heating source. If you've ever filled up, your propane for your grill or your heaters, oh my gosh, they've gotten so expensive. It's incredible how much one of those cans of propane costs right now. They say the propane stockpiles are at an all-time low. Demand has never been higher, right? So, again, one of these perfect storms. The price of propane up 400%, and says that they expect the average temperature across the United States to remain well below the 30-year seasonal average, at least for the next 10 days to 2 weeks. Which is going to put more pressure on the propane markets. And again, we're not talking about 4%, right? We're talking 400. We just had a trucking company come out and say we're raising all driver pay by 33%. I mean, Jason, if that doesn't get people's attention, nothing will.
Those propane tanks that you buy, Joe, if you buy it and you need the tank and the gas, is more than double the cost of just turning the old one in and getting the refill. Do you know that? I mean, that shows you the containers that the natural gas goes in.
Right, even they're probably running low on the containers.
I saw one area, it was $44. This was about a week ago. It was $44 to get the tank and the gas. It was like $19 to get the gas. I forget what how many gallons.
You guys must have a lot more propane than us. I want to say propane and gas, almost $70 here.
Yeah, and like I said, this was like a couple of weeks ago, Joe. But what I was noticing definitely was man, if you don't have the empty to turn in, it's more than double. So even just like with the El Dorado water thing, the packaging isn't available, which makes it even worse.
Yeah, and this is just ultimately the biggest problem. Remember, I told you how this ends. This ends by crushing demand. If you don't crush the demand, it's not ending. The shortages are here. Everything, just about any major product line, from plastics to cardboard to copper to gold to silver to oil to lumber, tin, aluminum, lithium, right? You name it. Everything. Corn, right? At all-time record low inventories. And if they're not at all-time record lows, they're right near all-time record lows. And the problem, Jason, is everybody seemingly needs as much as they can get their hands on. At the same time, there's not enough product available. And again, there's only one way through this. And I don't think the Fed has the stones to do it, which is to crush the demand, which would mean probably the Dow. We had a caller last week brought up the Dow. When the Dow hit the low after the financial crisis, you know how they like to do the retest. You got to retest the low to say that's the new base, and of course it never did it. Eric used to talk about it forever. Hey, it's never done it. I guess for me, ultimately, if it went horribly, horribly wrong, that may be what we're looking at. That would be something I hope doesn't happen, Jason, but we're relying on a group of people at the Federal Reserve that have been proven to not know what's happening.
Yeah, and Joe, with the inflation that we've had before 2021 and then the inflation that's happening now, the Dow, even gold and silver, everything has a price comparison to everything else. I don't think you can see Dow at 6,000 just because it's ridiculous. But Dow at 10,000, Dow at 9 or 11,000, it could go really, really far down. But at some point, Joe, the value is there. There are still companies functioning. There are still a market, and everything's inflated. So once it's inflated, we're just not going back down to those lower prices. But how low can it go? It was in 35, 36,000. It can go down to 20 easy.
Say that, but here's the realities. If the housing market falls apart,
which it will,
right? If all of a sudden, look at the job. You know what? And this was the other point I wanted to make. Layoffs last week. What the heck? They almost went back above 300,000. We went from, and I'm not kidding, 2 weeks ago, everybody was crying we don't have enough help to almost 300,000 people out of work. And again, I think there's this underbelly again to, we kind of talk about the underbelly of the stock market. The underbelly of the U.S. economy right now, I think a lot of businesses being pushed to the brink because of inflation. They just can't stay profitable. They can't pay their workers enough. They can't charge enough for their services, Jason. And it's almost like, and it's early. I don't want to say that. I just have that feeling that if this stuff continues, and then you see the PMI report out today, which kind of leads me right back to where, maybe this thing just very quickly we can go from those higher highs and that euphoria to this thing's just snowballed out of control, and it takes on a life of its own.
Right, Joe. The home builders. I guess in America, I was watching this thing. We are littered with zombie home builders. These zombie home builder companies. They barely can pay their bills and barely continue on building homes. You raise rates by 0.5 point to 1.5 points. All those companies are just destroyed, Joe.
800-951-0592. $20 Liberties and Saints. Save $25 today at $2,100 at 800-951-0592. The losses getting a little worse now on Wall Street. The Dow's down 850. The NASDAQ down 510 now, down almost 4% for the day. The S&P down 135 points, down 3% on the day. The only thing higher today is gold right now, $1,834 to the ounce. By the way, Silver Eagles, those 2022s, we have less than one case left. I don't know that we're ever, I don't want to say ever, but it's unknown as to when we'll get another shot at these. So if you want the 2022 U.S. Silver Eagles, right now they're $730 to the roll. That's 20 in a roll. And then, of course, the $20 gold pieces today. That's a great value there at $2,100 at 800-951-0592. As again, tomorrow starts the Fed meeting. Wednesday we'll get the press conference, but this is going to be something where the rubber's meeting the road here, and unfortunately, I don't think this economy was as nearly as strong as they thought it was. We are incredibly sensitive to inflation, and believe me, I wish inflation was only 7%. That would be doable. It's closer to 20. Apparently, in the trucking industry, someone just said, hey, wage inflation is 33%. I mean, again, J.P. Morgan, remember Jamie Dimon, remember what he said a few weeks ago about inflation? Hey, stop crying about it, just accept it, and, let's hope we have 4% growth. And without 4% growth, I'm sorry, Jamie, the math doesn't work very well for the vast majority of Americans out there, Jason.
That's exactly right, Joe. And when you compare the indexes, the Dow, the S&P, and the NASDAQ to gold today, if you just do the comparison, gold's up $55 an ounce today. I mean, in comparison, that's how it looks, because these indexes are down 3% and gold's holding its own. This market correction is going to be a sell-off of everything. We'll see some days, I think, where gold may have a down day and silver have some down days, but you're going to see the market sell off even more. And this is what's good about when they manipulate gold and silver with the paper markets, because now that the paper markets are just getting blown to bits, and it's going to happen, gold's just kind of holding its own because it's already way lower than it should have been. This is great for gold because gold's not going to crash like these others are going to. And then, Joe, as the inflation continues going on and on and on the rest of this year, maybe even into next year, gold will just start going right up the ladder. And then you'll see the Dow
gold's
go down.
Going to be just fine during the rate hiking cycle. And the big explosion is going to be when the Fed cries uncle. Joe Biden was out this weekend. First time attacking Jay Powell, saying that, hey, you know what, the Fed did a great job during the pandemic, but they need to step it up because this inflation's getting ridiculous. And again, I think a lot of pressure everywhere. There's no great answer. How about the CEO of Target? You think this guy probably's got a good idea of what's happening out there? Probably, right? Outside of maybe Walmart and Kroger and Costco, Target, the war, if you will. Here's what he said. High inflation eating up the wages. Says that it's going to directly impact U.S. Consumers. They're going to have to drive less, eat less, stop going out, and he said reduce their shopping habits. So again, all of these things. What does that sound like to you? When the CEO of Target says, "Yeah, man, everyone's a lot poorer. Inflation's killing them." By the way, they're going to have to drive less, eat less, go out less. They're going to have to reduce their shopping habits. Doesn't that sound like recession, Jason?
It sure does, Joe. It sure does. As the markets are down, the Dow's down 9-10 now. We're just sitting here this hour on the show, Joe, and it just keeps on going. It's crazy when sometimes you just watch it just dying in front of you. And yeah, we'll be in bear territory pretty quick. If you add last week to what's going on this week, if it continues on like it looks like it may, we'll be in bear territory pretty quick, and then recession only take a few months, right?
Yeah, and that's the hard part. Again, you never raise rates historically with the economy slowing. And this is why I said they missed the boat. They should have been raising rates last year. The bond buying should have been over a long time ago. But the problem was, here was the problem. Just think about how much the bond, they had to put $11 trillion into that cumulative into that repo market just to save it all. And again, they didn't fix anything. They just, kicked the can farther down the road. And now all of a sudden we're entering into this thing where I think the Fed is going to be hiking rates right into the middle of a crash and not even realize it's happening, Jason. And then when they have to turn around and run, that's when things really get out of hand.
And think about it, Joe. These people that are looking at the markets today and, I better just start selling and go to the sidelines with my cash. Then they're going to look around. What are they going to buy? If they don't understand gold, they're going to sit there with their cash and have it inflated and lose more value. These people are really going to get smashed, Joe, by this whole thing.
800-951-0592. $20 gold pieces. Libertyers or Saints, you call it. Mix them up. All one, all of the other. $2,100, and the last of the 2022 Silver Eagles, $730 at 800-951-0592. Final segment coming up. 800-951-0592. Here, gold's now up 1835. It's $20 gold pieces, $2,100 today. A huge savings today. Silver's down 50 cents at $23.77. But that's off the lows as well by about 20 cents. So silver showing some resiliency here. 2022, $30. Healthcare. You want another thing going up? Man, I know my mom, huge increase on her premiums. 37 states now. Healthcare costs make up more than 10% of income. Go back to Obamacare. When Obamacare first started, only 10 states was that the case. He's almost gotten it done through the entire country. Healthcare costs continuing to eat up paychecks, and the healthcare industry saying 2022 expected increases in premiums, Jason, expected to be significant. So just another one of these things eating up the paycheck. And I may,
there we go.
I may have lost Jason.
No,
there you are.
I just needed my mic turned on. So, I remember when Obamacare came out, because I'm not a purchaser of healthcare. I've always just taken care of myself and figured if I go to the doctor, I'll just pay for it. But when Obamacare came out, it's like, they were trying to force everyone to buy it. So, of course, around tax season, they try to charge it to you, and hey, you don't have this, we're going to charge it to you. So, I was having my taxes done. I checked into, how much is this thing going to cost me? And I think it was like $500 a month for me and my wife and my son. And then it had like a $5,000 to $10,000 deductible. And I'm like, but this doesn't do me any good. This doesn't do me. And this is years and years ago, Joe. I can't imagine how bad it is.
Oh, yeah. I'm going to tell you right now, it's going to be way more than that.
Yeah. And this was a long time ago, Obamacare. It was terrible. Why should somebody who's healthy and I spend money on the front end to take care of myself have to buy this stuff? And then there's a deductible that's so massive. It's like, well, that's a yearly deductible. So if I don't use it in 1 year, then it renews the next year. It was a big nothing for me. It was terrible.
I'll give you an easy one. Before Obamacare, we had a $5,000 deductible. Me, my wife, my two kids, it was $252 a month.
So that's okay. That was reasonable.
Our deductible now, fast forward to today, the deductible is now $10,000 a month. So I had to double it. and now we're paying $1,070 a month, essentially a 400% increase in premiums. That's just my premiums. My copays went up. What I got to pay for everything went up. What my insurance covers went down. I mean, it's actually even worse than that. 800-951-0592, and now they're talking about we may see the largest premiums yet coming in healthcare. As we close out today, the Dow is down 800, so it's been as high as 950. Listen, sooner or later, there's got to be at least a short-term bottom. I don't know how long that bottom will last, but the Dow down 810, the S&P down 132, the NASDAQ still down over 500 points this morning, as again, the air's getting let out of the bubble. The Fed, to Jason's point, they're just trying to control this thing. And we look at January here. This may be one of the worst Januaries we've seen, depending on if Jay Powell puts his foot in his mouth on that press conference on Wednesday, Jason. It could be a wild, wild end of the week.